Good morning. Welcome to IG's early morning call. It's Friday, the 24th of November. In fact, the end of what is essentially the last full week of November. This time next week, it will be the 1st of December. Let's take a look at the headlines as we wait the start of today's European session. We are looking at what's happening around the Japanese yen. There was an initial strengthening of the Japanese currency on the release of slightly stronger than expected consumer price data, which increased bets that the Bank of Japan will be focusing on restriction of monetary policy sometime, possibly early in 2024. Meanwhile, the UK economy is in focus. We've seen some pretty good GfK consumer confidence numbers coming in stronger than expected, but still negative. But nonetheless, there is this lingering inflation. We've seen commentary overnight in the Financial Times from Hugh Pill. He's the chief economist at the Bank of England, suggesting that the fight against inflation is not yet over. And in amongst the stocks to watch today, we've got the US markets back. We've got trade, all sessions on the IG platform back at 9 o'clock this morning. One of the stocks to watch will be the AI chip giant NVIDIA. There's been a delay of its China-focused chip. The company is now talking about a potential first quarter of 2024 for the release of this chip, which is potentially big income for NVIDIA. This is a report so far from Reuters. Look at volatility, bumping along the bottom. What else can I say? We're currently trading at 15. The lows that we had just a couple of days ago before the Thanksgiving Day holiday, taking us all the way down to 14.6. So that indicates that people are not too worried about selling these markets. That being said, the London markets, if anything, I think are going to be the weaker ones at the start. We're looking for a lower start to the London markets at the moment at 74.65. But in fact, what's been happening on the continental markets is the markets have been holding up. In fact, in today's session, intraday, we've seen the highest print on the German DAX since the 31st of August. Again, as we see a continuation of this punch higher, we still have yet to see a substantial candle close beyond this line of resistance that we saw from the highs back on the 15th of September at 15,992. But you can see the direction of travel. I think it's just a question of taking out some of the auto shorts that are in the market. And when we get rid of those, I think the next potential high there is this high up here, which were the highs we had back on the 31st of July. And yep, that's the record high, 16,530. It's going to take a heck of a lift to take us up there. But technically, there's not an awful lot stopping us between where we are and those highs there for the German DAX, which is strange when you bear in mind the German economy is in, if anything, one of the weaker parts of the Eurozone economies at the moment. Still a big industrial powerhouse compared to some of the other economies. And it is still in amongst the main leaders of policy. But the German DAX is representing an economy which is flirting with recession. So the DAX looking like a slightly stronger start at the beginning of today's trade, despite that backdrop. French markets now looking potentially as though we could well see a little bit of a pullback at 72.67, just a few points below where we were at the cash session yesterday. We're talking about a lot of light volumes because of the Thanksgiving Day holiday in the States. And in fact, if we look at the markets out overnight in the Asia Pacific region, we've got the Japanese markets back today. We are up 0.5%, so a bit of catching up to do on the cash session there yesterday. The Japanese markets out for Workers' Day. Hang Seng Stock Index down 1.7% in today's session. S&P ASX closing with small gains as at the end of the week. Now, let's remind ourselves as to what happened a couple of days ago in the US markets. No trade yesterday on the cash session, but I was talking yesterday about the 24-hour markets, and many were saying, well, why bother with the 24-hour markets when we got a holiday in the States, which is what happened yesterday. I'll show you what happened with the Dow. The 24-hour markets did push higher. And in fact, we got a print we've not seen since the 14th of August on the Dow Industrials yesterday. The bottom line is that IG provides these markets. There is an opportunity to trade them should the need arise. Thankfully, there wasn't a need yesterday. An outlying black swan event potentially could well give us an opportunity here to look at these markets to buy up or down. But in fact, yesterday it was a fairly unremarkable day in terms of some of the news flow. And as a result of that, we've just seen a little bit of a tick higher. Dow Industrials expected to open slightly higher than we were on the cash session on the midweek trading day. But it is only a half day's trade on Wall Street. Which means that many people will be enjoying a 4-day weekend. You can see the S&P 500 holding on to much of the gains. And these multi-month highs, 23-month highs for the NASDAQ, broadly speaking, we're holding on to that there at the moment, 15,986. Just wanted to update you on one other headline that's just breaking, and that is concerning what's happened in China and Taiwan. Foxconn. The former chief executive, Terry Gou, has decided, or initially he had pulled out of being CEO of Foxconn. Foxconn is one of the largest iPhone manufacturers in China. And Terry Gou is the chief executive and the founder of the business. Now, he initially pulled out from being chief executive of Foxconn because he wanted to run for the Taiwanese presidential election. We've just been hearing some breaking news that he is now withdrawn from the presidential election campaign for Taiwan. One wonders what's driven him to do that. It could well, of course, be for personal reasons, but there are a lot of pressures have been brought to bear on him and his business in China because of his decision to run for president. No other details are available other than the fact that he has decided to withdraw from the Taiwanese presidential election, which is due for next year. Next year is a really big year in terms of elections around the world. All the big economies have got elections, a lot of elections in Africa, a lot of elections in South America, and there's a lot as well in the Asia region, including Taiwan. And it is, according to The Economist, a record in terms of the number of elections that are being held next year. So let's hope democracy wins through in all of those. Now, let's take a look at some of the economic data out that we've seen out overnight. I want to begin, first of all, in Japan. Consumer prices picking up in the October reading, reinforcing investors' views that the Bank of Japan is going to have to start rolling back monetary stimulus sooner rather than later. Headline inflation accelerated to 3.3% in October, year on year from 3% in the prior month. Core consumer prices, which excludes volatile fresh food costs, rising 2.9% year on year in October, after a 2.8% rise in the previous month, just below the 3% expected by economists. But the fact that they're expecting a stronger number indicates that the economy is not yet done in combating inflation, which is now beginning to show through, which many in China are celebrating because of the deflationary environment we've seen for so many decades. The narrower gauge of inflation, or what they call in Japan core, which strips away fresh food and fuel costs, rising 4% in the year, slowing from the 4.2% gain we saw in September, but staying at or above the 4% level for the seventh straight month. I want to show you what's happening with the Japanese yen. Initially, we saw some interest in buying. In fact, we still got a little bit of buying for this. This red candle here represents a drop in the dollar against the Japanese yen. The inflationary pressures appear to be more stubborn than expected. Speculation is growing that the Bank of Japan will soon have to ditch its negative interest rate policy. And if it does that, we could well see an opportunity here to sell this market. If you're selling at 149.39, which is where we are at the moment, your stock just goes above the 150 level. I want to show you as well what's happening with the euro against the Japanese yen. Same sort of thing, still a little bit of selling today against that slightly stronger Japanese yen. The Bank of Japan has brushed aside such speculation about whether or not it's going to start raising interest rates, saying that the cost pressures are largely driven by higher global commodity prices and the weaker yen, which means it's not demand side, it is actually supply side economics, which is causing this little bit of an uptick in inflation. And that is not good. And that is something else that we've seen here in the UK as well. Let's take a look at what's happened here in the UK, because British consumers have turned more optimistic about the outlook for the British economy, according to market research firm GfK. GfK's headline consumer confidence index stronger than expected in November, increasing to a negative 24 from October's 3-month low of a negative 30. But this was above the Economist's forecast of a negative 28, so that's better than expected. This 6-point increase is the biggest month-on-month improvement in the past 7 months. Now, talking about inflation and what is doing the damage to the economy through inflation, whether it's demand or supply side, I think it's interesting looking at what we're seeing from the Financial Times this morning. There's a report there quoting Hugh Pill. Now, he's the Bank of England chief economist. He says the central bank has to resist the temptation to declare victory and move on against inflation. Mr. Pill says the UK monetary policy has entered a difficult phase. The UK is showing signs of weakening activity. We've got this coming through with a very poor GDP number. But at 4.6%, inflation remains stubbornly high, he says, well above the Bank of England's 2% target. This is a quote from him. There's a slower growth in activity and employment, he said, but because he thinks that there's more supply-driven rather than demand-driven inflation, the weakening of activity is not associated with the easing of monetary pressures. And what's going to happen is ultimately is that this pressure that's been brought to bear on the Bank of England will mean that interest rates may have to stay higher for longer. Could they raise again? There's a possibility. But this might reinforce this idea that we've got further upside to go for sterling. Let's take a look at sterling against the US dollar. I was talking this week to financial technical analyst Patricia Elbers. She was talking about a 130 price target sometime in the first quarter of 2024. Her first stop-off point would be a rise to 126, which is the next big round number up, which would take us up to a highs for sterling not seen since the 5th of September. And she was talking here about putting your stop loss underneath the 200-day moving average if you're long on sterling. Sterling against the US dollar, sterling against the euro, a bit more difficult to call, but she's suggesting potentially we could well see some further upside to go there. And this would be borne out with this idea that the Bank of England is far from done in its combat against inflation. Let's take a look at what's happened in Germany. We've got some breaking news out in the last half hour coming through from the German economy for the GDP number, contracting by 0.1% quarter on quarter in the third quarter. This is the final estimate for Q3 GDP in the German economy. So year on year down 0.4%, flirting with recession. With the economy having all sorts of problems, which is another reason as to why we should perhaps maybe think of what's going on in the German on the German DAX is strange, bearing in mind the backdrop to what's going on there. At 9 o'clock this morning, we get the German business climate from the IFO Institute, expected to rise 87.5 in December, up from 86.9 in the prior month. I want to show you quickly what's going on in the euro-dollar trade. This rising support line we had here on from the lows that we had back on the 4th of October remains in place, although we've got a steeper accelerated rise that we've got here for the euro against that weaker US dollar. I'm not suggesting it's all about a stronger euro, or perhaps maybe the fact we've got there a weaker US dollar. I'm just trying to get rid of one of these lines here to show you where the next line of target is if you're long on this. 109.65. We're currently trading at 109.09, but we've got these higher highs higher lows coming in, not higher highs at the moment, but that's the price target. Once you get a candle close beyond the 109.65, the next high is the shooting star candle we had here back on the 10th of August. at 110.65. That would be your next price target if you're long on euro against that weaker US dollar. Talking about the dollar, over in the US, we get the S&P Global PMI data out later on today. Remember yesterday we saw the PMI data. Pretty much every single reading across Europe, including the UK, was down below 50, which means contraction, apart from UK services, which saw a very slight rise above 50, which is a bit of an upside surprise. Today, S&P Global Manufacturing PMI data in the States seen falling from 50 down to 49.8, and the Global Services PMI number in the States expected to fall back to 50.4 in November from an October reading of 50.6. That's from the US side of that US dollar reading. So let's take a look at what's happening on the currency markets. Let's look at what's happening in just one stock to watch today. It's an all-session stock on the IG platform. Watching at 9 o'clock here as we see the all-sessions trade get underway. The chipmaker NVIDIA, the AI chipmaker, has told customers in China it's delaying the launch of a new artificial intelligence chip. Here we got NVIDIA not too far away from the record highs at $518.50. This looks potentially as though it could well see a little bit of pressure building at the start of the day's trade when things do get underway at 9 o'clock. Designed to comply with the US export rules, the launch of the H20 chip, the most powerful of three China-focused chips, will be delayed until the first quarter of next year, according to this Reuters report out overnight. Earlier this week, investors were taken aback by the group's sales expectations in China when the group published its quarterly earnings. Prior to this delay, NVIDIA was already set to take a hit from the vastly expanded US export controls on what the company could sell to China. And this could have a bit of a depressive effect on the stock of NVIDIA at the start of today's trade. If you're short at $485.30, the stop goes above the $500 level. Now, let's take a look at a risk event and an item of trading volatility for the week starting Monday, the 27th of November. And we're looking ahead to the postponed OPEC meeting. It was due to be held this weekend. We now know it's been postponed until Thursday, the 30th. And this has raised a lot of speculation about what's going on behind the scenes. Normally, when we get the ministerial meeting coming through, they will have had pre-meeting meetings amongst themselves to come up with a decision on what they're going to do. They don't want to be seen to be holding the meeting and then having it drag on because there's been disagreements. And clearly, there's been a disagreement about just how much oil supply cuts we need in order to sustain the price. What's happened recently is that we've seen a bit of pressure being brought to bear on some of these oil prices. Brent is the chart to watch because this is the benchmark for OPEC and OPEC crude pricing. We're below the 200-day moving average. This will move in today's session on this Friday. But I think the direction of travel here is very much lower highs and lower lows. Now, one of the areas to watch out for is this low we had here back on the 16th of November, when we see a pullback in the markets expected. Now, if we do see total agreement and they come through with supply cuts, if that is what happens, we will then see an uplift in this. If we see a continuation of the failure or just a continuation of what we got, I think we've had a 5% drop in crude oil supply over the last year with these cuts that are still in place by OPEC plus. If we see just a continuation, then I think there's an opportunity here to sell this, in which case your stop would go above the 200-day moving average at around about the 82.50 level. We're currently trading 81.37. This is the area down here to watch, would be an area of support. If we do see OPEC come through with a highly watered down version of events, what's happening is that some of the nations that sell oil into the market need the income coming through. So they are continually selling oil. And in some cases, they are quota busting and they're selling more oil onto the market than they're technically speaking allowed to do. By some of what goes on in terms of these supply cut agreements that are coming through. So that's the postponed meeting to Thursday next week, the 30th of November, potentially watching downside for Brent. Just one other area of the market to watch out for today. I want to show you this. Well, there's not much reason to do so, and that's what's going on with spot gold. Not much move. We're trading not too far away from the 2,000 level. We're just something like around about $6 away from that at the moment at 1993.7, and that's certainly the area to watch. I think it's just a question of taking out some of these shorts in the market before we get an uplift. I was talking about this yesterday, this double top or channel breakout. We've got this channel here. It's either a double top and we see a drop down in the market where we would see lower lows come through again, almost down to here. And that itself would then see us break this line of support at 1931. Projection of that would take you down there, down to 1850, which would be a price target if you saw a candle close below 1931. I think more likely is certainly if we get a weaker dollar, is if we get a break of this area up here and you get then a projection. The calculations we've undertaken recently would indicate a new record high at something like around about just below the 2100 level. But that's what we're doing. We're waiting on a technical move, whether it's going to be a breakout on the upside or a double top pattern taking us lower down once again. But gold once again, not moving much at the start of today's trade. 4-day weekend of the States, and I think that's likely to dog the markets in today's session with further light volatility or light volumes across the markets. Watching the start of NVIDIA this morning at 9 o'clock, all sessions on the IG platform, could well see a little bit of an opportunity there to sell that market. We're back at 10:30 with Charting the Markets, and Angela will be back at 1:30 with a look at the early morning call for the US markets when things get underway on what is likely to be a thin trading day today because of the fact that Wall Street closes at 1 p.m. Eastern Standard Time. So we get that market expected to see an early close today. That's it from me. Have a good weekend, and we'll see you next week for the early morning call on Monday.